And now for a quick roundup of this week's personal finance news. Are you relying on ultra-low interest rates to pay your mortgage? Well, the Bank of England has warned that significant numbers of mortgage borrowers could face financial problems when its base rate starts to rise again. The bank estimates a 1% rise would require 9% of borrowers to change their financial situation by reducing how much they spend trying to earn more money or by swapping their mortgage provider. If you rent your home, you might have noticed that it's becoming a bit more expensive. Rental prices have risen by 8.4% in England since May 2005. The rise has been driven by an 11% increase in London, new official figures show. Now, over the past year, the cost of renting rose 1.3% in England, 1.5% in Wales and 1% in Scotland, according to the Office for National Statistics. It's the first time the ONS has recorded private rental costs in what it describes as experimental data. And there's good news for anyone heading to Europe this summer with a smartphone in their pocket. New rules come into effect on Monday, which will make it cheaper to use maps, check emails and update social network sites while travelling across the EU. The European Union's mobile roaming regulations will lower the price caps for data downloads by 36%. Now, do you know the difference between your introductory rate, your purchase rate or your balance transfer rate? We're talking credit card jargon, and understanding it properly could save you hundreds of pounds. According to research by the University of Bristol, many consumers struggle to understand what's meant by the annual percentage rate, or APR, which is the traditional measure of working out how expensive it is to borrow. Now, to help make things a bit clearer, a new website has been developed to help people who are struggling to balance the books at home. With me now is Pt2, Head of Policy at the debt charity Step Change. Peter, with all this jargon around, it's very difficult for people to understand. No wonder many are confused.
It certainly is. I mean, credit cards are a quite complex product. They do lots of different things. So your APR, you might see the headline thing. Now, the APR is designed to help people distinguish between products. It's representative. It assumes you're borrowing a certain amount and using your card in a certain way. But you've just talked about different types of introductory balances, transfer balances, which will be generally at a lower rate, balances for purchase, amounts for purchase, which will be a higher rate, and then an even higher rate for cash transfer, cash withdrawals. So if you use a credit card in different ways, it's very hard to know what it will cost you. And of course, you can repay a credit card at different rates. So if you use the minimum repayment in particular, it will be very much more expensive than if you pay the bill in full at the end of the month.
So this new website, cardcost.org.uk, will have more details on that in a moment coming up. But it's essentially been designed to cut through all this jargon and really help people understand exactly how much they'll have to repay.
That's right. Help people understand what they'll have to repay, and also to give people a bit of a warning. If you are paying the minimum repayment or just over the minimum payment, it will tell you that your borrowing is going to be expensive and you may be repaying for a long time. So I looked at it this morning. If you borrowed £2,000 and repaid just the minimum repayment, you'd have to pay £4,700 and it would take 24 years to pay it down. Now, the thing that worries us is if you get stuck into that cycle of low repayments, that's the way that debt problems can begin. So it's a useful warning and tool for consumers to see how their borrowing puts them both at cost but also maybe at risk of debt.
Now, we hear that overall figures for borrowing have decreased, so people becoming more sensible. What's the average amount people would still have on a credit card?
Well, we're seeing people who are coming to us who are in financial difficulties, and certainly the average credit card debt has come down. But for people it's still about £10,000. For people with one credit card, about £3,000. So credit cards are still an issue. So it's important that if you find you're struggling to pay them, if you find you're paying just the minimum repayment month after month after month, think about getting some help and maybe some advice about budgeting and about maybe help with debts. You could be in the early signs of financial difficulty.
OK, Pt2, thank you very much for talking to us. Now, the site has been set up by the UK Cards Association in conjunction with Bristol University, and you can use it to explore how much your card costs you. Now, if you think it might be useful, here are the details, cardcost.org.uk. And that's all from Your Money for this week. You can get all the latest money news from our website. It's bbc.co.uk/Your Money. And if you want to contact us on Twitter, we're at BBC Your Money. That's all from me. Goodbye.